Good evening. This is the Elliott Wave Daily Update for the S&P 500 and the Nasdaq 100 for Monday, November the 18th, 2024. Strange market. It just is very persistent in how it wants to present itself. And again, I believe that it's still revolving around the market and the option flows and the gamma and volatility triggers and everything of that nature, which I am going to get into today. It remains interesting because the market really felt as it was going to go up and it was going to start breaking out to the upside, which gave the illusion that this minuet wave 2, which I've marked here, still unfilled in terms of reaching its destination. So that I felt that the minuet 2 could have been complete, and this is going to be 1-2, and then we're going to go off. And believe me, it actually still can be 1-2, 1-2. But under that type of a scenario, and if I claim it to be 1-2, 1-2, what absolutely has to happen from here is that the market, bingo, has got to go up, and it has to go up with speed. It has to go up with strength now, because what is basically saying it's 1-2, 1-2, and next up is a 3. In fact, it would be the 3 of the 3 on its way back up to fulfill the larger pattern, which would be a minuet third wave going up. So again, yes, we could be in there, but it needs to turn, it needs to go, it needs to break above the 50, the hourly 50, the hourly 200, and it needs to start getting itself and sitting well above 5,900. Now, granted that the market is likely going to finish today above 5,900. So the move itself, in terms of the ES versus the SPX, which did not stay above 5,900. And so that 5,900 level is more important to be reached and sustained by the SPX, the cash market, not necessarily the futures market. Now, when I add into this that we have the spiders, which is just the ETF of all the rest, right? That is what I think really threw a lot of triggers today. We started the day with the spiders sitting right above the volatility trigger. And it continued to trade. The volatility trigger was at 586. So the spiders are going to finish still above that volatility trigger, but below the largest gamma position right now, which sits at 590. Now, I had thought, okay, it goes up there and clips that one, and then we're headed. We're going up, and we will begin to focus and get ourselves, or the market will get itself up to the call wall, which remains at 600. The call wall in the SPX remains at 6,000. And its largest gamma position is also there at 6,000. The volatility trigger in the SPX was at 58.95. It finished the day at 58.93. So what did the SPX do? Did the SPX actually go up and get itself above? It did. It got up to 59.08. So it not only went up and started to head towards, well, it broke above the second largest gamma position, which was at 5,900. Now closed back below that. Now closed back below the volatility trigger. So can we say that the volatility trigger was successful in breaking above? Not really, because it didn't follow through. I mean, it did and went up and started to go after that 5,900. And did that actually get taken out? I don't know. I got to see how it looks after everything gets put into the models and the numbers are run, if it actually did. So again, this to me is what's really kind of putting the forces on our market. Well, from what the post-election bump that we've got, the rally, I was beginning to feel, okay, we may start to go back into that. And we started to see some of that year-end posturing. I think the year-end posturing, they may be considering it early, but I think that it's underway, and a lot of different things were happening today. We saw Apple become very active again and actually had a decent close, had a decent day. Stock was up 3. We saw AMAT start to recover from, it's getting knocked in the face. We saw many things recover from last week's strong selling. Now that also just kind of got all filtered out, as I discussed. So a lot of gamma was released, a lot of options as they expire, releases things. We did get a little bit of a pop in volatility. And then because we broke above the volatility triggers in the spiders, in the Qs, in the SPX, and in the ES. So we break above those volatility triggers, and that normally starts to signal risk on. And when I looked at the VIX itself, which you can't see here, the VIX, they were actually, it was initially opened higher. So there was the pop, but then they started to sell it. They started to sell the VIX. And that's when I thought, okay, so now we're above that volatility trigger, and they're immediately going back to reestablish possibly a lot of these risk-off positions or the risk-off that closed a lot of those positions, or reestablishing positions that may have been risk-on, but they expired. So either way, I'm kind of looking at this going like, wow, interesting day, not technically the most difficult day to trade. It had its periods, it had its moments, and if you're able to catch them, that was great. Initially, we had some strength to the upside, which was great. Then they brought it all the way back down, and then they ran it all the way back up. So decent moves. Not if you had the patience for them, let's say that. If you had the patience for them, they were decent. And the ability to actually day trade and that was present. What did kind of turn around today and actually closed pretty strong today is gold. So did gold finish its pullback? Kind of looking that way. So gold gained $45 today. Then we started to see a little bit of some downside in Bitcoin, but then Bitcoin rolled over and decided, nope, we're not going to deal with that. Then they went up and finished the day up closer to all-time highs, or maybe these are new all-time highs. I'd have to go check. But it had also a decent day. So the market, again, continues to just roll and play each individual as we move forward with the continued election results, as we move forward with how do we want to really put into the market or put into the scenario or to put into anything with the United States decision to allow Ukraine to use U.S. missiles to be fired into Russia or into Russian territory. And what's that going to do? How will that escalate things? Will that really rock the boat? So there's that. And I think that partially had something to do with the uncertainty, not only in the Ukraine, but in that whole situation. And as far as I want to state, gold doesn't like uncertainty. If there's an uncertainty that could really start to affect capital, affect money, affect the dollar, affect other currencies, then the natural thing that's happened over the years is that they take the money and they put it into gold, which supposedly still is, and I do consider it a storehouse of value. Now, having said all that, let's go back to look at the S&P. It still appears that I am going to leave the count as is. So as I've done, because remember I said over the weekend that this decline And this is what we had coming over the weekend. It had come down, and then it had rally up at the end of the day. This is basically remaining unchanged, and that I feel that this was minuet wave one. So that would be the preferred, and the alternate is that minuet wave 5, the minute wave 5, the minor wave 5, and the intermediate wave 3 completed here. And this would have been on November the 11th, the highs on November the 11th. And here in the S&P, in the ES, it would be 6,053. Now, new all-time high, all of that fits. I can count 5 up, all of that fits. But we kind of come down, and we're still seeing some movement which kind of lends itself to, I still believe that there's going to be this upside move. I still believe that the year-end posturing will get back into gear. It's my feeling. That's kind of how I'm looking at how the moves are occurring and how the count is kind of coming out. But day by day, if the market continues to fail and the market continues to attempt and fail, then eventually I think we will see the end result of failure, which would be that it is all done and we're heading lower in those first stages of the intermediate fourth wave. Now, that remains, as I say, on the shelf as an alternate. And what I'm leaving in force is that we are still working through an ABC for minuet wave 2 out of 5, right? So we're looking for 5 waves of minuet degree to put in the minute 5th wave. So there's 1, there's 2. Not done yet. Probably should move this over. So within that, we have A, B, we're still in the C wave. 1, 2, 3, 4. Nice little ABC. I've already told you what the alternate can be even within the small framework. It could be 1, 2, 1, 2, and minuet 2 could be done here. Okay, those are the two. That's what I'm working with. But what has to happen, you can't just dawdle around here. If it's 1, 2, 1, 2, that would suggest we go and we go and we go. And we break here, we break here, and we just keep going. Because it would be a third wave of a third wave. Time to kick it into high gear, if that is the count. How heavily am I leaning on that? Not very. But it's there. Right? As I often say, what I attempt to do with my updates and how I count is I always present an alternate and a preferred. My preferred is still that the market's going to figure all this out, and we will get that upside move. Now, again, what I think a lot of the market's waiting on is the last big player. I mean, big, massive player, big, $1 trillion corporation, if they've crossed that line, which is Nvidia. They report on Wednesday after the close. So that's kind of what I also think. Now, what kind of happened in Nvidia today? Well, they managed to get it down there. I think it's let me just double check to see, well, what's the low in Nvidia? The low Nvidia today was 137. So managed to close back at 140. Now, last week, it had gotten close to 150. In fact, Friday's expiration, I was like, oh, okay. I think we're going to head towards that 150 level, at least give it a good stare and a good test. Didn't work. They just kind of brought it in and they started to sell it. And then today, I thought it was going to open at least to the upside. Nope, it did not. They started to sell it. They sold it off, but then it managed to close back at 140. So here we are, the wait and see game. And we still have tomorrow and we still have Wednesday to deal with. And then, of course, the earnings themselves. So we may not know what the resolve is to all of this. Is it going to come down and finish at 2? Is that going to be it? It's going to come down and go right through all of this. So unfortunately, to where we sit right now, I think if it comes down and it breaks the 618, that's still an acceptable position. I mean, that for wave 2. But what wave 2 cannot do is it cannot go below the starting point of wave 1. And that at the moment is 57.24. Now, that's still pretty far below where we are. That's at least 186 points, 82 points, whatever it is, below where we are. Now, could that occur? It could, but it's going to need a kick to get it there. And that could be this, they don't like Nvidia's earnings. Nvidia comes out maybe with good earnings, but they're going to put, like everybody else, put some forward guidance onto this whole thing. And that may be not what they want to hear or something of that nature. We saw it happen in AMAT. We saw it happen in Microsoft. We saw it happen in others. Meta. We've seen stocks that the earnings were great. They took the stock up, and they even went up and like a Meta. They took it to 600. They let it go. They brought it back down. They took it back up and gave it another look, and then they just let it all go. So I don't know, but I'm just going to leave it as follows. I'm still going to consider this minuet wave 1. We're still within minuet wave 2. As it stands right now, I'm going to go 1, 2, 3, 4. That we will have some additional downside. Now, where I've marked it is that it seems like it wants to center itself right around that 0.618 retracement level, which is going to be 58.49. And then we have 58.51, which is where this wave 5 would be equal to wave. Actually, no, it wouldn't be equal. It would be 2.618 times the length of that small little wave 1 of this C wave. But it does come in on a fib, and it does match up on the 0.618. So it makes sense that we drop and we get back to there. And if it all holds and we turn and we start to go, I'm still going to be looking for the same type of a move. Impulsive, strong, impulsive, up and out of any low that's new low that's going to create it. If a wave 3 is going to start upon the completion of a wave 2, which is what we would expect, then I believe it needs to be a strong start, an impulsive start, a quick 5 waves up, getting beyond all of this and up into here in 5 waves before it starts to pull back. So that's what I'll be looking for. In lieu of that not happening, until we break below these levels, which would increase the odds that this completed everything up to intermediate wave 3, I'd have to really take a closer, harder look. Could I basically kind of come in and say this is 1, this is a 2? I probably could, but it really doesn't count out well at all. There's more corrective than it would be starting to impulse down. So this is where we are. Now I'm going to take a quick look to see what, if anything, is going to be coming out tomorrow. It's a very slow type of a week. Tomorrow we have housing starts and building permits, and those are both at 8:30 a.m. Eastern. I'm not expecting a great deal to come out of that. I've been surprised before, so I could be surprised again. As we wait for Wednesday. Now, let's take a look. I don't think there's going to be many changes. I always use the daily, and I look at that daily to get a gauge on the moving averages. And really what's happened is the 20 is now going flat. The 20 is going flat right there at 59.11. So I'm going to say that that's going to continue. We ended up closing above the 20, which is a good thing, or we're trading above it. We're not going to be closed for another 11 minutes. So here we sit. Here we sit. So 59.11 basically is where the 20, and I think it stays flat. If the market continues to go up from here, then we'll start to angle up a little bit higher. The 8 will turn, but even the 8 is now beginning to lose its the descent part, the angle, and it's starting to swing back into also being flat, and that's about 59.46. So you could say there's going to be, if it goes flat, that's where the resistance is going to be. All right, and then the 50 pretty much also starting to round out and go flat, about 58.18 according to where it is, and the 200 is just there. Let's go over and take a look at the Nasdaq. In the Nasdaq, problem child personified, I got to tell you. A little bit easier to trade, but not the best trading today. It was okay. But I originally came in this morning, and in the trade room, I had switched all of this around. Thought, oh, great. This is 1, 2, 3, 4, 5. I put the C, the 2, put it all right there. 1, 2, here we go. And then it went, no, there we don't. So same deal, folks. 1, 2, 1, 2. There's no room. There's no room to keep coming down. If this is 1, 2, 1, 2, it needs to go. It needs to go nonstop. It needs to go with power and purpose of just moving everything higher, which means that we can't have this cross activity in terms of Nvidia pulling the market down, Tesla pulling the market up, Apple pulling the market down, but we had other things that started to, Microsoft wasn't up for a lot of the day, Meta wasn't up for a lot of the day, and so, even Netflix started the market down, but then it's up 23. It's like that type of thing. I need to see it all move in conjunction. And also, what would be helpful if we are truly, in terms of breaking above volatility triggers, breaking above call walls, then that activity shoves it back into, or not shoves it, but it puts the markets back into a positive gamma / quote atmosphere. Positive gamma produces more buying. So as the market, as traders in the market go and sell the VIX, and they're buying the underlying volatility. So the underlying within these indexes, that volatility, and that's just they're buying calls. They're buying calls and selling puts in stocks. And then that, as the dealer, their hedge is, if they're selling the calls and buying the puts, their hedge is buy the underlying. And that, of course, then if you're buying Apple and you're buying all these stocks, then what happens to the index? Well, of course, it's going to go up. So here again, in the Qs, so we'll just switch over and look at the Qs for a moment. The Qs actually opened, I think, strong, and have now kind of gotten themselves back to the call wall. This is where they're going to close, right? This is for the close. So they've decided to move something up to get it back up to 500. It didn't appear that it was going to close there, but I'm looking at it right now. And if they take the 4 o'clock close for the Qs, it, I believe, was below. And so right now, I think they're just trying to get that 500 close. And so it started also at its volatility trigger, which was 498. So it was right a little bit below, a little bit above, a little bit below. And then they pushed above it, which put it right into a collision course to get itself up to the call wall, which is at 500. And the largest gamma position sits at 500. So, and I know that the Qs actually, let me just go over and see what their high today was 502. Now, Not sure how high it has to go before that call wall is declared done, because it came back down. So that I don't think that all that gamma was cleared out. I think a lot of it is still sitting there. So what's next? Well, what we need to see is the Qs get it above that call wall and don't stop. They flip things back with the volatility trigger beginning to suggest, okay, we're going to move back into a positive gamma situation. Instead of negative, we go positive, which favors buying versus selling. Negative gamma, selling. They'll be selling, like on Friday, what we saw, hard selling, because they broke and kept going. They broke those levels and kept going. So I'll see tomorrow. I, again, don't know. I don't run the models. So I'm independent, and I'll see how they come out. How much was taken out of that 500? How much is still there? Or has it all shifted to a new level? We will find out. But in the meantime, I've gone back and I said 1, 2, 3, and that's a 4. I would love the market to prove me wrong. I really would, because I am still leaning towards that we will rise, go to new all-time highs yet again, and likely up towards, well, and I think at least 22,000 to 23,000 before we're done with the minute 5, the minor 5, and the intermediate wave 3. Right now, I can't put on my last or some additional because we're not even close. So I got 1, but as soon as I can get all the way up 3 and a 4, then I could run 1 to 4 to get our projections for the 5th wave. Again, same thing as in the S&P exists here. If we continue to just slide and break down, the alternate remains that this level, this high at 21,340 would be considered the end point for minute 5, minor 5, and intermediate wave 3. So it also minuet 5, minute 5, minor 5, and intermediate wave 3. In lieu of that declaration, because it's not been proven yet, I believe we have one more down to put in the low for that minuet wave 2 and then start a rally. If this, where I've marked it as 3, is going to be the completion point for that smaller 5, and then the sub minuet wave C, and then the minuet wave 2, then it's 1, 2, 1, 2, and it needs to go. It needs to go. No more joking, guys, or guys being the market. No more joking. No more playing. You got to go. So that kind of suggests that, it's like, let's make up our mind on Nvidia, and we may not be able to until those earnings are known, until that press conference is held, until the CEO or whomever's going to get out and speak gives it all and leaves the market feeling strong, or leaves the market questioning the stock's ability to just kind of make it up to 150 or even up to 200. I've seen some where they're saying 200, because don't forget, as soon as all this comes out, you can get all these adjustments made to forecasts by every major player in the street. So it's where we sit. Again, Nasdaq is not immune from the geopolitical situations. None of our markets are. So we have to consider if things escalate in different places. If things start to really just turn, and I don't like using it, so please take this lightly. If really they just start to get stupid, in many different things that are happening within our country, outside of our country. It just, it's going to get weird. And how the market wants to interpret that. So we have a lot to just sit and be patient with. All right. And that's where I'm going to leave it for today. I don't want to really have to go into great detail because I want to try to keep these on a little bit on the short side. So the next update will be on Tuesday, November the 19th.